First of all, thanks everyone for joining us. We've got I think we're gonna cover a lot of ground today. It's an exciting start to the year in the crypto markets for sure. And by way of introductions, I'm Jerry O'Shea, head of global insights at Hashdex, and I'm joined by our head of research, Pedro Lapenta, and also head of research for Falcon X, David Lawant. So two very quick administrative matters before we get going. The first is that our typical disclaimer that this webinar is for educational purposes only. So any product-specific information or questions about products, please refer to the appropriate prospectus. And I also wanted to note that we'll save hopefully 15 to 20 minutes toward the end of this discussion for questions, but please feel free to submit them throughout. And hopefully we'll be able to get to all of those. So, David, I thought maybe we'd kick things off with you, and I wanted to give you the opportunity. I know there's a number of folks on the call that are familiar with Falcon X, but for those that aren't, would you mind just telling us a little bit about your firm?
Yeah, of course. And thank you, Jerry. Thank you, Pedro. It's always great to be here as a former Hashdex partner and stout industry observer. Always great to have these conversations. So Falcon X is one of the leading global crypto prime brokers and trading desks. We basically cater to institutions, and by institutions, I mean a very wide range of institutions that go all the way from the most crypto native venture capital firms and crypto hedge funds you can think of, all the way to the most traditional finance type of firms that are just entering the space, and going all the way to the spectrum, including crypto miners, protocol treasuries, now a very exciting and new client persona we have, which are the ETF issuers. So it's like we try to cater to a very broad range of institutions by providing a one-stop shop that gives them access in an institutional way. Perhaps just to dig a little bit deeper into the types of services we provide, and perhaps more relevant for this webinar, I'm sure we're going to be talking a lot about the ETF flows and things like that. We are one of the leading liquidity providers in the market, meaning I'm sure a lot of folks are watching, and we're going to discuss about these net inflows that we're seeing from the ETFs. At some point at the end of the day, these Bitcoin need to be sourced, and we are one of the trading desks that some of these firms would call at the end of the day in order to source this Bitcoin. We actually published a press release saying that I think we did over 30% of the creation volume in the ETF day one, the spot ETF launch day one. So it's a very exciting new venue for us. We also provide credit facilities and a bunch of services that would be associated with traditional prime brokerage. And I'm basically the head of research. I joined the firm about a year ago to start the research function, and I'm very happy to be here. We can discuss more, but I feel like that's perhaps a good starting point for us.
Yeah, and it's actually it fits very neatly with the first question, because I was actually thinking it was almost exactly 1 year ago today that you joined us for one of these client calls, and it was a very different environment a year ago. Weren't really sure what 2023 was going to look like in terms of recovery. Bitcoin was trading, I think, close to 20,000, maybe just above at the time. And there was a lot of uncertainty in particular about whether or not Bitcoin ETFs would be approved anytime in the near future. So that changed pretty quickly, particularly with the entrance or the application from BlackRock in June, a few months later. But as you noted, you've been very much in the middle of this, the ETF activity, and so you're very, very close to this. And I would love your thoughts around kind of how this first month has gone, in particular around the flows that we've seen. Have you been surprised at the flows, disappointed? I'd love your perspectives around those things.
Yeah, of course. Well, it's definitely been a whirlwind. I'm sure you guys have been also very much following this closely. But I think we had a few we had perhaps like a few regimes. In the very beginning, we definitely saw signs of euphoria, perhaps in the very day one. And day one was very interesting because on day one, the only information we'd had was around volumes. We couldn't see until the end of the day how much assets these ETFs were gathering, which is the main variable that most people were tracking ahead of the ETF launch. And then on day one, basically what we saw was a very high volume, but we couldn't see what the inflows were going to look like. And perhaps the initial phase here is that we saw a lot of the ETF issuers gathering very meaningful assets. But on the other hand, one issuer, which is GBTC, seeing significant outflows to the tune of $500 to $600 million a day, that was putting the net number a little bit down. Over time, these GBTC outflows, they kind of tapered off. And one interesting thing, and perhaps the most surprising aspect of this of the ETF inflows, is that the typical ETF cycle basically comprises of a pretty, or let's say the typical successful ETF launch cycle or sales cycle is basically very strong in the beginning, then it tapers off relatively quickly, and then it builds sustainably from there. This is just about the way that ETFs are built and sales forces are built in the US. These firms cannot market their products before launch. They actually can even show the ticker until 12 months after launch. So the actual sales process starts actually right after launch. So you would expect kind of somewhat of a bump, an initial bump, and then it builds sustainably from there. The surprising thing, I believe, is that we actually haven't seen that bump. ETFs, these ETFs continue to gather a massive amount of assets, especially over the last few days. So I think over the last 2 to 3 days, maybe 3 days, net inflows into spot Bitcoin ETFs have been at or above $500 million per day, which is massive. This is a very, very large number that I think, I feel like this is basically where the main surprise has come from. And this is why I think we're seeing the interesting and positive price action that we have seen over the last week or two. There's definitely other factors we can talk about, but a big one has been this positive surprise on these ETF inflows, which already had high expectations, but so far they've been proving to be really strong.
Yeah, Pedro. So I do want to ask a couple more questions around the ETF specifically. And there really hasn't ever been an ETF launch like this, where you had essentially 11 issuers lined up, competing, and what David was just saying in terms of the surprises that we saw. I mean, is there a element of kind of hype to this that is going to fade over time in terms of like the billions of net new inflows that we've seen? Or are you anticipating that this is more a sign of sustained interest over time and demand over time?
Yeah, thanks, Jerry, and thank you everyone for participating in one of our monthly calls. Well, my sense is that, in everything in traditional markets, you have that anticipation phase where people are betting, you buy the news, sell the rumor, or the other way around kind of approach. We saw that a little bit happening with this ETF's approval. But I don't, and the immediate reaction right after we saw, David pointed out at the beginning, we saw some hype, and then, as GBTC outflows, were a little higher than the inflows at the beginning. We saw some market correction, but I think that's just a technical 1-2 day thing that happened in this market. And to your question, I think it's just beginning. It's a very important event for the industry. not only because you're now accessing or giving access to this product in the largest market in the world, but it came in a wrapper or in a vehicle that is suitable for a lot of people, and obviously came with the SEC approval, right? And that has a lot of spillover in other markets, as people were like, okay, we want to see the US regulator moving forward on this, right? Giving them their go ahead. And that has spillover effects for other markets. And when we talk about, Bitcoin and crypto institutional investors in several markets, and we see that, people are so not yet into it. So there's like obviously there's now increased interest coming up because of the ETF, but it's so far behind, compared to other asset classes that, makes us very, very, very bullish going forward, in terms of flows, in terms of interest, in terms of new developments. And I think this is just the beginning, really. And we were doing this graph the other day, like kind of like doing some projections, and we coined, like kind of the first 15 years of Bitcoin. Bitcoin has, is 15 years old, and it surprised me at this point in time that, it's still so much not penetrated in portfolios globally, and it gives us, the hope that it's going to be big coming up. But this first 15 years, we would call it, the phase of early adopters, the phase of VC enthusiasts, the phase of the people, who are willing to take higher risks. But now we're entering a new phase. We're entering a phase of mainstream adoption, regulated products, Wall Street era, and this product, beginning with Bitcoin, and then it will manifest in other products later in the cycle. But like this product, like people in institutional funds and pension funds and endowments and sovereign wealth funds, these big major players, like analyzing the asset, seeing how it fits in portfolio and start allocating. So this will be the new phase, right? The phase of the Wall Street era, or the Main Street adoption phase that I think is just the beginning. So and we're seeing, the past 2 weeks, inflows have been consistent, like every single day, and it's outpacing the supply of Bitcoins out there, both, from miners who are natural sellers, also from the network who's also, issuing new coins or minting new coins. But it's not enough to attend the demand that's coming up. So prices are going up, and again, I think it's going to continue.
I think I think it was last week, I saw that Fidelity Canada, within one of their asset allocation ETFs, is now recommending between a 1% and 3% Bitcoin allocation. So Pedro, I don't know if that's the type of thing that you think. I know you have a lot of conversations with professional investors and even institutional investors about this. Is that the direction that we're going in terms of these ETFs really being part of people's long-term portfolios?
Yeah, I think it's the beginning of that phase, right? Well, remember, these institutions, these big institutions, they have committees, analysts, they have, risk controls, compliance, and all that stuff, and they have to attend these necessities, right? And the product, like, being wrapped by big players such as BlackRock or Fidelity's or the Franklin Temperatures of the world in a vehicle, the ETF vehicle, is a big thing, and and I think it solves most of these people's issues, internal issues, like committees and systems and compliances and all that. So the more we have, and this launch was super exciting because we saw all the major asset managers launching products, right? And it's not because these people aren't going to launch products if there's no demand, right? They're going to do it because their clients are knocking on their doors and asking for a product with an issuer that they trust and in a vehicle that they understand and their systems are adapted to using it, and compliances and back offices and middle offices and all that. So So the more we have that, the more we were going to see crypto integrating portfolios globally. But again, they're in the early phase overall. I'm speaking in general here, right? But they need to understand how the asset behaves compared to other assets in their portfolios, the correlations, the drawdowns, the expected returns, the volatility, and all that. But it sure is like a long term trend, I think. And again, this is an asset that is supposed to be uncorrelated with other traditional markets, right? Michael Saylor just came out with an interview, and he mentioned that and it was super interesting the way he put it, because he said like Bitcoin is, especially Bitcoin, right? Is well, this decentralized network that has no link to any country. It's not a company. There's no changing management. There's no product cycle. There's no quarterly report. There's no SEC report to file. So it's a different thing that people need to get used to, right? And these analysts are starting to do that. So again, long answer to your question, Jerry, but I think this is the beginning of a long-term trend that is here to come, is here to stay.
Yeah, and I'll David, maybe just ask one more question about the ETFs, because it's obviously a very important topic, but I also don't want it to dominate the entire discussion today. But and you had touched upon this a little bit earlier, but would love you to go a little deeper if you can around how these ETFs are impacting the overall market structure around Bitcoin with regards to liquidity, volatility, those types of things.
Yeah, that's a great question, and this is one that we, of course, watch very closely from a trading desk perspective. I think as Pedro said, the ETF launch is a massive milestone. It's a very monumental moment for the industry, and I do think that the Bitcoin price formation process, or the Bitcoin market structure, is going to start to feel a little bit different from here on than it used to be, in a good way, meaning it's maturing as an asset class, it's maturing as an asset. So there are a few things that we're probably going to see over time. So for example, we're now with these ETF inflows that again have been massive and will probably continue to be, and then we're going to start to see probably new products. So you're basically bringing a new audience or a new type of investor that was hard, or that had a hard time accessing Bitcoin through a clean vehicle. And these are basically financial advisors and retirement accounts. This is probably a different type of investor compared to the average crypto investor, in the sense that these guys will do will rebalance their portfolios, they will do their tax loss harvesting. So you are bringing a different investor profile, and that's the natural aspect of the maturing asset class. So that's one thing. The other thing that we're probably going to see in the future is that I think we're going to see in the future is that I think the SEC will approve the current filings around options on the ETFs. This is also perhaps somewhat of an underrated aspect, because there are certain a relatively big chunk of the market that has a hard time trading crypto options. Because today the crypto options market is basically either based on the underlying asset in offshore firms that are not accessible to US persons, or you have options on CME futures contracts, which are basically accessible only to large institutions, to like the type of firms we interact with. The traditional or average US person investor doesn't have an easy way to interact, for example, with crypto options. So this is something that I would expect to see approved over the next few months, and this is going to add another layer of liquidity and another type of investor persona. So I do think that the market structure is going to change significantly, but we can already see some aspects and some changes happening right now. The big one that a lot of folks are watching, we actually wrote a report on that, is how the ETF fix, which is the time at which these NAVs are struck and these Bitcoins are sourced, This process happens, it varies by issuer, but it happens between 3 p.m. and 4 p.m. Eastern time. So you can already see the influence that this time has been having on the Bitcoin price formation process. So a chart I like that I've been running is the percentage of the total volume that is coming from this specific time window. And this number used to be 4 to 5%. Now it's 8, 10 to 12%. So this number has doubled or tripled. So the increase has been very dramatic. And the turning point is, of course, the ETF launches that took place on January 11. This is for USD markets, right? So if you include like the stablecoin market, like the stablecoin pairs, like the more like global liquidity pairs, the effect is less pronounced. But if you focus only on the US market, meaning BTC USD pairs, you can see that effect very clearly. All these things, I believe, will make the Bitcoin price formation process feel a little bit different from what it has in the past. Again, in a good way, and as a reflection of the asset class maturing. And of course, there's forces that can point to different directions here, but I feel like in the long run, one of the impacts that we're going to see is that Bitcoin will probably be a less volatile asset than it has been in the past, because a lot of these changes in market structure, they provide a gathering point for large institutions to gather their orders, or they bring a new type of investor that might be more either long-term oriented or more like rebalancing focused, or they provide options, which is a different way for folks to express their opinions in the market for a big chunk of the market. Overall, I think that these changes will point towards a reduction in the Bitcoin volatility, but it will definitely be very cool to watch. We are already seeing some of these impacts happening, and I think we are going to see even more over the next 6 to 12 months.
Pedro, I think we can pivot away, from the ETFs here, and because I do want to talk about some of the themes that we see emerging in 2024. And obviously last year did end up being very much a year of recovery for crypto assets, but I wanted to give you the chance to talk about some of the major themes that we see within crypto for this new year, beyond just the activity that we've seen so far with the ETFs. Yeah, you're on mute.
Yeah, sorry. Yeah, well, we put out a report, our annual outlook, for 2024 back in late November, early December, and obviously the regulation side of things was a big theme that we put out, and it played out, in terms of the ETF approval. But I think, and on this topic, I think the main thing for 2024 that we put out was the meeting of traditional finance with blockchain technology in a global scale, right? I think that's the main topic, because remember this again, Bitcoin's 15 years old. The technology that it works upon, blockchain technology, has been tested and over-tested and in several occasions, and finally we're seeing global players, global banks, investment firms, kind of looking at it from a utility perspective and using it for their purposes. Obviously there's discussions about private blockchains and public blockchains, but it's a strong sign, like seeing everywhere, like in major markets, but especially like in the US, Brazil, Europe, and several other countries in Asia. You're seeing people studying the technology and see what it can do to its financial systems in terms of better costs, faster transactions, more innovation, more product, and this meeting of traditional finance and crypto and blockchain is unlocking a lot of stuff. And it began with, obviously we needed an SEC approved product, like kind of kicking it off. So this is the big theme, and you see Brazil here, for instance, working with the Drex, which is an Ethereum-inspired smart contract platform. It's a private one, but it's going to be connected to a public blockchain like Ethereum in the future. We're seeing other people like running their private, blockchains, like to connect to public blockchains, such as banks in the US and other players, and that's in line with what I'm saying. This connection of traditional finance and crypto and blockchain. So this is the major theme, and this will culminate, I think, in a big push in tokenization, right? Tokenization is something that has been talked about for quite some time, and in that sense, what you're doing is you're bringing off-chain assets or assets that don't live on these networks to these networks, and this will kickstart volumes, and it will use DeFi, and it will be used for leveraging it up, to fractionalizing it, to put it on an NFTs, and make it out all sorts of the legal transactions, or all sorts of DeFi transactions that can be produced in these public blockchains, in these smart contract platforms. So this is a major theme, and when you look at it, what could be tokenized, I mean, the sky is the limit. So this is a big theme for us. It takes time. It's no short of complexities to do this. You have to do it by region. You have to do it by product. You add layers of complexity. But this is an equivocal trend in my view. And on top of that, we're seeing like specific themes. The picking up of layer twos. Is something that is important to follow. Yeah, for those who aren't familiar with L2s or layer twos, these are layers that work on top of a major, for instance, Ethereum, a smart contract platform, or even Bitcoin. So they can process transactions at in bulk, at cheaper prices, and making it more accessible to other new use cases. And we're seeing a lot of stuff coming up, new ideas because of the surge of these L2s. And then we're going to have the zero knowledge, which is something that is probably going to eventually come up in 2024 online, that it's going to bring like a new era of also, transaction costs and speed for these layer twos. And this will, but my point to this is that this will unlock new use cases, right? This will unlock new market segments to start using these public blockchains, and also we're seeing a lot of comments on decentralized physical infrastructure. This is something that's been picking up lately. These are only possible due to blockchain technology, where you connect people from different countries, different regions, to solve a specific technological need. Or one common example is people share their connections, share their 5G connections, and they get compensated for that, or they process transactions for other people and they get compensated for that. This is part of the decentralized physical infrastructure. And I think it's controversial. I don't know if David has a different opinion, but I think DeFi is gonna pick up again in volumes, as obviously, well, the native tokens pick up in prices, but I think as people get to know it, as more of the VC cycle that was built in the past 2023, 24 cycle is going to come up, and we're going to see volumes in DeFi picking up. But this is a controversial one. I don't know if he has a different opinion.
No, I actually agree. I've always been a big fan of DeFi. I do believe that it has been lagging a little bit, not in terms of only price action or anything, but in terms of like industry kind of traction. But it's DeFi is a massive breakthrough for the industry, and I would definitely expect DeFi to pick up at some point. As you all pointed out, of course there's some reflexivity here against prices. I think the TVL in DeFi crossed 100 billion, is now back to over $100 billion, which is a pretty decent number. Of course, some of that has to do with the market environment we are in. But yeah, I'm a huge DeFi fan, and I would very much love to see a stronger comeback.
all of these things, of course, will be impacted by the macro environment this year, right? And I think there's a lot of uncertainty, as there always is. But David, I know I think it was just last week you put out a report about the link between crypto and the macro landscape environment. And so I'd be interested in getting your thoughts around what role you think macro will play with regard to crypto prices this year. Not to specifically ask for price predictions, I wouldn't do that to you, but if you want to talk maybe a little bit about the connection between the two, that'd be great.
Yeah, of course. No, I think this is a very important topic, in the sense that today there are probably two major drivers for crypto price action today. One is the ETF inflows, and we're seeing that. We talked about those dynamics. So far, they've been extremely positive, and I think they have been the major driver right now. I think the reason why Bitcoin just crossed the $1 trillion market cap mark is basically because the ETF inflows are coming extremely strong, especially over the last 3 days or so, as we mentioned. There is another aspect, which I would say today is probably secondary, but that over the next few months could start to gain importance, which is the macro environment. Crypto, of course, is a risk-on asset, so it is impacted by whatever is happening in broader liquidity measures and the broader liquidity environment for risk assets more generally. This hasn't been the case for the last many months. I would say that probably over the last year or so, a lot of the crypto price action has been guided by, perhaps if we go back a year ago, like you can think about the US mid-sized banking crisis in March, you can think about all the lawsuits lawsuit decisions that happen around the industries. There's the Ripple versus SEC, the Grayscale versus SEC lawsuit decisions, of course, anticipation ahead of the ETF launch, and now with the ETF inflows. So a lot of these factors, or most of these factors, they have been industry driven. One interesting thing, though, is that I think we're starting to enter into a new leg of the macroeconomic cycle. One thing I've been telling a lot of our clients and people I talk to is that it almost feels like January was the 13th month of 2023, in the sense that we had kind of a couple of capstone events happening in January that the market was building towards for most of the year of 2023. Of course, there's the ETF launch, but there was also the Federal Reserve meeting that happened at the end of January, which what I say is it was probably the last Federal Reserve meeting in which the market had a very, very good assessment of what's going to happen many months in advance. We are starting to see expectations shift much more quickly now. So, for example, just a month or so ago, there were strong expectations, or there were some expectations that we were going to see an interest rate cut in March. Now these expectations have been pushed to May, and maybe a little bit further than that after the inflation print we just saw yesterday. So I feel like we are kind of in an adjustment process from the macro economic cycle standpoint, and these things usually impact risk assets more generally, and it tends to impact crypto and Bitcoin as well. One way to measure that is through just correlations between Bitcoin and broader risk assets. I like to focus on the correlation between Bitcoin and the SPY, which is the S&P 500 ETF, or the QQQ, which is the Qs, which is the Nasdaq ETF. And if you look into how those correlations have been behaving over the last many months, of course, there was a big pickup around 2022 and such, but over 2023, this correlation has been only in a downtrend. And over the last few months, it's been hovering around zero. So it was like low, but decreasing. It went actually pretty sharply negative. And the interesting thing is that these correlations are still very low, and that doesn't say anything about Bitcoin as a portfolio diversifier. They're still low enough. So we're now probably at 0.25, which is like super low, and that's kind of the range where Bitcoin has always been, or has been most of the time. But we are starting to see these correlations starting to pick up. So it's this is not to say that Bitcoin will become extremely correlated with broader macro assets. I don't think that's going to be the case, as it was perhaps in 2022. But I think that macro will become a more important factor to drive crypto prices. Again, especially as we enter into this new leg, with the market perhaps expecting interest rate cuts. There's questions on the commercial real estate in the US, regional banks, which are a little bit more to the forefront. Perhaps the midterm inflation outlook right now is a little bit murkier than it was. So there's a number of uncertainty factors that I don't think have been present in the last few months, and that can impact the price formation or the price action for crypto. Yeah, I'll just stop. I mean, we can talk about macro for a very long time, but I'll just stop here.
Yeah, well, it's actually I was going to turn to Pedro, because I know in the last, I don't know, 6 months or so, you've been talking a lot about this kind of combination of secular and cyclical factors that are kind of setting crypto up very, very well. And on the cyclical side, the one thing we haven't talked about yet is the upcoming Bitcoin halving. And so, Pedro, I'd your thoughts around the halving, the impact to Bitcoin, both to its price and to its the broader ecosystem. If you could share some thoughts around that.
Yeah. Well, this just a quick note on this secular versus cyclical framework that we've been using. And it was motivated, obviously, by the 2022 crash in all markets, but in crypto specifically, because we were like, okay, did the thesis break like after 2022, before the recovery phase started last year? We were like thinking about what's going on in the industry. Did the crypto long-term investment case break, or is just this part of the ups and downs of a normal exponential technology that grows very fast at the beginning and in its early adoption phase? And we concluded that, like, looking at whatever happened in 2022, that the problems were more related to traditional human errors, like risk management practices, the lack of regulation, bad behavior, but nothing related to the technology itself, right? Or most of the problems weren't related to the technology itself. So the investment, so we thought, maybe the investment case is still there, right? It's just so we put out this report calling, the secular trends for crypto are still there. The adoption of blockchain technologies is just beginning, and there's the world to use it still, and more addresses and more use cases and more volume, or in relation to anything that you compare to traditional markets. So we were like, okay, the long-term trend is there, but where we are cyclically, right? Should we be buying? Should we be selling? And then we were like, okay, so we are in front now of eventually the turning point in the cyclical aspect of it, and that's where part of it was the halving, right? So we were looking at we were looking at the next 12 to 18 months to see catalysts of potential price appreciation or market movers, right? And in any more advanced market, or like the halving wouldn't have to have the impact that it has in crypto, right? Because this is public information. But for those, the halving is a mechanism of the Bitcoin network that it reduces every 4 years approximately, or 210,000 blocks, the issuance of new tokens or the new coins by the network to incentivize miners and validators, right? So in that sense, what it represents from a monetary policy It represents that every 4 years it halves the issuance, so it divides the inflation rate of the network by 2 every 4 years. And currently, the inflation rate of the Bitcoin network is sitting at around 1.8% per year, right? So every year, the new issuance is represents roughly 1.8% of the total coins outstanding, and the halving, which is set to happen in less than 60 days, is gonna divide again this inflation rate to 0.9, 0.8%, and that happens until it mints the last Satoshi, and it puts the cap in 21 million Bitcoins ever issued, right? So this is a very, very important mechanism for the Bitcoin network, because this is where it stands the whole narrative of scarcity, right? Or absolute scarcity for Bitcoin. And in previous cycles, and then we're entering the fourth halving cycle for Bitcoin, right? In the previous 3 cycles, there were massive market movements, positive market movements, both prior the event, and we monitor this on a 500 basis prior the event and 500 days after the event, and we're in all 3 past cycles we saw massive movements 500 days before and major movements 500 days after. And in this cycle we are on track with the past 3 cycles, right? And it surprises me, again, how early we are, because if this is public information and everyone knows about it, why does it have impact on prices? And my point is that like, it's not penetrated yet to the point that, and it's not big enough yet to the point where the halving event doesn't it doesn't impact prices, right? So we're seeing again in the 4th cycle, and I think this 4th cycle is very important in terms of the impact, and we can might not assume the impact that happened in the 1st cycle where the market cap was very small, but we can still expect a tremendous impact coming up, because we now have, as we've been speaking here, all the global financial markets having access to Bitcoin, right? And the US as the last one, or the last big one to give access. So you have potentially, and we're seeing the initial movements here with the flows. So we have a lot of demand coming from this front. At the same time that you're at a point in the Bitcoin network issuance schedule where the inflation rate is low, it's going to reduce even further. And the free float of Bitcoin, let's put it this way, in normal market terminology terms, is super restricted, right? The number of long-term holders just increased every single day. The number of Bitcoins available, is not big, and then then we have the halving, and then eventually we have this, this pro macro cycle helping. You see the US start pricing in cuts along the 2024 curve. You see China as well, injecting year to date, actually in the last 12 months, close to 7 trillion renminbi, which is close to $1 trillion, and these are the 2 major markets. So we're seeing an increase in global liquidity. At the same time we have the halving, at the same time we have the ETFs open up in the US. So my sense is that we're going to see similar shapes in terms of price performance as the past cycles have shown. So this is I mean, it would be, if we didn't have all these aspects, the ETF approval, like global liquidity increasing, it would be tougher to make this statement, because the market cap of Bitcoin now sits at $1 trillion. It's harder to move $1 trillion market cap than it is to move out of 50 billion or 100 billion or 2 billion even back then, right? So, but again, the movements that are happening, all these aspects that we've been talking about, I think give us confidence that that we're going to see once again a halving cycle with strong price appreciation.
David, I've got a question for you. I'm going to shift a little bit back to ETFs, but not Bitcoin ETFs, Ether ETFs, and the potential for Ether ETFs. And just a reminder too, I see we have a handful of questions already, but if people have questions, please feel free to send them through, and we'll try to get to them in the next 10 minutes or so. But what are your thoughts around the impact of an Ether ETF? Will we see something similar whenever that happens, that something similar to what we saw with the first 30 days of the Bitcoin ETFs in terms of demand, or is this another animal in itself?
Yeah, no, this is a great question, Jerry. You know, I still feel like the market has been, I mean, just from conversations from clients and market participants more generally, I feel like the view of the market is that there's probably a 50, and we talked about this last week or earlier in the week when we did our prep. I think the odds of an ETH ETF coming in the first half of this year is probably around 50%. So I see a lot of folks kind of, some are perhaps slightly above 50, the others are slightly below 50 in terms of odds of us seeing an ETH ETF approval, meaning I don't think an ETH ETF is something that is widely priced in the market, like perhaps even the Bitcoin ETF in a way was. As we were getting into the ETF, there was a lot of expectations. A lot of players were attributing 95% plus of chances of us seeing a Bitcoin ETF approval well before the event. I don't see the same dynamic playing out for Ether, though. I feel like the market's still more like in the 50-50 phase. So that plays favorably for a potential reaction on ETH if there is an ETF approved, which I think it's going to happen. The question is whether this is going to happen soon or maybe at a slightly later point. The other important point here is that ETH is significantly less liquid than Bitcoin, just because it's a smaller asset, right? So like if you look at trade volumes, or if you look at order book depth, pretty much whatever liquidity metric that you look at, you're going to see that ETH is probably 50% less liquid than BTC. This is also interesting and plays in favor of a strong price impact, because you just need less inflows, but like less absolute net inflows to drive the price higher. Having that said, it will obviously depend on what the inflows are going to look like. That is super hard to predict. I think it's easier for us to get to it when we're closer to that point. I think the key date to watch for now is May 23rd, which is when the first ETF applicant, the SEC deadline kind of expires. So let's see how it goes from there. The other thing I was going to say, just to finish here and we can move to the Q&A, is that there's actually, as Pedro well pointed out earlier in this conversation, there's many positive drivers around ETH beyond the potential spot ETF approval. So there's the next upgrade coming actually in about a month. There is a chance we could see 2 Ethereum upgrades this year, which is something that not a lot of people are talking about. Ethereum is scaling. I think we're seeing some very interesting breakthrough applications, especially in the decentralized social media space. There's the whole restaking narrative, which is something that will allow ETH to provide security to other networks. So I'm actually very excited about ETH, especially if you consider that it has pretty much underperformed the other major assets for perhaps 6 to 9 months now. I think ETH is an interesting asset to pay attention to.
Great. Let's definitely go to the questions. We've got a couple good ones here. This first one, Pedro, I think I might send it your way. It's regarding so in 2021 when El Salvador made Bitcoin legal tender, the question is, and I'm paraphrasing here, but people are paying attention to the ETFs mostly now, but what about the potential for another country to adopt Bitcoin as legal tender?
That's a good one. I don't know. I really don't know, but like legal tender it's a big shift, right? This is like you can pay your taxes in Bitcoin in your country, and you can go to any vendor, restaurant, that they're obligated to accept Bitcoin. That's I think that's a shift later in the process, that you're going to see more and more people doing that, as like Lightning Network picks up, payment systems get more used to it, and it gets more integrated into traditional finance. Because I mean, if you're going to transact on the main layer and pay for a coffee, it's not the best experience, right? It takes times for the blocks to be validated, and you have confirmation. Like the price is volatile and all that. I still think that the next phase of Bitcoin is more towards what we've been saying, like the surge, or the emerging digital store of value narrative, right? This is one that's going to continue picking up, and I think this is the phase for next year, for this year, and more use cases towards payments, instant payments, and global like transfers and all that. I think this is all it's been developed in parallel. But to answer the question, not answering, I would see, as the infrastructure improves and we have more throughput in other layers, then we can see more and more people like adopting this on every single day, and then maybe a new country adopts it as a legal tender, because a legal tender is a major movement by any country, right? And I honestly don't. I honestly don't know. I honestly don't know.
Yeah, I don't think anyone does. So I think that's about as good an answer as you can get for the question. But fascinating nonetheless. I think so we've got what, 3 minutes left. Let me just ask you guys both quickly this last question around emerging themes. You talked about DeFi already. So I think both of you strongly believe in DeFi's investment case for this year. Are there other themes, or even if you want to go to specific crypto assets that you're excited about this year? And I'll start with you, David.
Yeah, sure. As we have just a few minutes left, I'm going to go very quickly here. Perhaps I'll just name the theme and then kind of in one sentence say why I'm excited about it. But one of them is what I think we can broadly call Bitcoin layer 2s. One very cool development around Bitcoin is that I think we've seen renewed interest to expand the Bitcoin use case, or the Bitcoin blockchain use case, beyond just monetary and payments. So you can see Bitcoin used for NFTs, and there's a few projects that are very exciting, that are kind of expanding the Bitcoin capabilities to do things like DeFi and all that sort of stuff. I feel like that's a very interesting vertical. The one that I briefly mentioned before is decentralized social media. There's an application called Farcaster that just came up with a very cool feature called Frames. If you guys are, especially for the more like technologist and product people in the audience, it's a super cool way and kind of a breakthrough crypto application. It's the typical example of something that crypto enables that you wouldn't be able to see in a traditional Web2 world. And it's also something that doesn't feel like there's any crypto working, because crypto is just working seamlessly in the background. I feel like that's a little bit of a glimpse of the future of how crypto applications will look like, meaning they will be invisible for the end user, but at the same time, they will provide things that we don't see on Web2. Well, I'm going to stop at these two just because there are very many, but I know we're running out of time, so I'll pass it on to Pedro.
Yeah, no, I agree. I like a lot what's going on in the Bitcoin network, and that's also like something that we follow closely here. But as I still believe, the year of 2024, at least the first half, I think it's going to be a Bitcoin focused still. market. But I would, continue looking at everything related to Ethereum, and I like, the L2s that are part of, like, an essential part of the growth strategy for Ethereum. The upgrade that is coming up in a month or so, the Kun upgrade, like, tackles issues related to L2s in terms of like more efficiency, simpler transactions, verification, how you store data, and all that. So I think these L2s are going to see increasing volumes, increasing use cases, increasing, like, more dApps moving to these L2s. So this is something that should be we're paying attention. On top of what David already mentioned, I really like these decentralized social networks. I think this is a huge market that blockchain technology can tackle with a novel solution, with a new business model where, it shifts power back to users and creators, and not what, how these, like, the social networks that we use today are, designed, where, most of the value accrues to the owners of that social network, right? So eventually this is something that we're going to see if it picks up, in terms of volume and utility and people using it. I think it's a very, very important use case to follow, as David well pointed out. But anyway, we're short of time here. Back to you, Jerry. Hope we answered the questions.
I think we covered a lot in an hour. So thank you both. And for those that are here, if you want to check out on our website, hashdex.com, our Insights Hub, lots of new and relevant insights. David, what's your Twitter handle? If you want to, is it Lawant?
Yeah, right. Thanks, Jerry. It's Lawant, just like DLAWNT, as in my last name.
Awesome. Give David a follow. Great insights always. So appreciate it, guys, and we'll talk soon.
Thank you, folks. Have a good one.
Take care.